Hello and welcome to Money Talks with me, Rev Sembi, and I'm pleased to welcome Ed Shing from the Opportunity Idle Investor Fund. Welcome, Ed.
Thank you, Rev.
Today we're going to be talking about what low interest rates might mean for mortgages and the first subprime mortgage. So with the Bank of England keeping interest rates at 0.5% and looking likely to keep that for some time, what might that mean for mortgages?
Well, what it means, Rav, is something that we can see, and I've put in the article, is that mortgage rates are trending down over time. And what we actually have seen start to erupt over the last few months, and I think will intensify, are mortgage price wars, i.e. banks trying to outdo each other to offer ever lower and more attractive rates for people to either take a first mortgage or indeed to remortgage.
I guess remortgaging is taking off as a result then.
Yeah, I mean, it's been quite strong, and those people with outstanding, if you look at those people with outstanding mortgages, mortgage rates on average have been trending down, partly because people have been remortgaging. But there was a recent Nottingham Building Society survey that suggested 1 in 6 people with mortgages were looking to remortgage and take advantage of these new lower fixed and discount rates.
Yeah, and so those people looking to remortgage, should they be talking to a mortgage broker to get advice?
Well, you know, let's face it, Rav, the easy way, as with most things these days, is to use price comparison websites. They exist: moneysupermarket.com, moneysavingexpert.com, moneyfacts.co.uk, all exist to give you the best buy tables for mortgages. That's always a good starting point. Then after that, I would actually suggest you go and approach your existing lender, because it's a lot easier to remortgage with your existing lender, to try to negotiate them down, than to hop to a different provider.
What are the kind of things people should be aware of when remortgaging in terms of the small print?
Well, I think the key thing, Rav, is not to be overly fixated on the teaser rate, the headline rate. You know, HSBC, for instance, do have a 2-year discount rate at 0.99%. It looks fantastic, but then you've got to remember there's always an arrangement fee usually involved, and that can be anywhere between £500 or as high as £1,500. So it can be a big chunk, and it pays to be aware of what that fee is.
That's interesting. So we've already got a sub 1% mortgage on the market.
We have, if you're prepared to swallow the arrangement fee. So, you know, it's sub 1%, but there's a big catch, and you've got to pay that check up front.
Sure. And there are a lot of new entrants in the market. So what kind of guys should people be looking to get involved
Well,
with?
you know, from a stock market point of view, I would say forget the big four, because we all know about them. And I would look more to the challenger banks. So these are new listed entrants such as One Savings Bank, Aldermore Group, and of course Virgin Money. People, of course, will have heard of Virgin Money because it has been around for some time, but it's a new listing on the London Stock Exchange. So you can now buy shares in each of these 3 banks, and they're all, because they have new offerings, they're all taking market share away from the established big four.
How might people be able to profit from, in terms of shares, in terms of the current situation, current scenario?
Well, those 3 are all listed, so that's one possibility. If you want to go for a specialist mortgage lender, I would suggest looking at the Paragon group of companies who specialise in loans and mortgages, particularly in the residential area, in areas such as buy-to-let, where they're particularly strong. The valuation is cheap. They're forecast to grow their profits by over 10% per year for the next 2 years. And if you really think the mortgage market is going to take off and remortgaging is going to take off, these guys, Paragon, might be the best bet.
Okay, brilliant. That's sage advice. Thank you, Ed, and thank you for watching.